Good morning, traders, and welcome to the weekly wave count update here on Elliott Wave Street. I'm Juan Maldonado, and I'm here to show you our forecast on some instruments for the weekly. Don't forget that this is just a sample of all the things that we do inside the membership. All right, traders, let's start with the euro. Let me show you something pretty interesting that I posted last week on Elliott Wave Street, an article about the euro that you can go and read. Pretty interesting. It's there on the homepage, and here was the forecast to have the wave 4. The wave 4 usually goes back to the previous wave 4 area. That's a common target. However, on some scenarios, we have the wave 4 going deeper into the wave 3. That's possible. And we are in a pretty sideways market, as you can see. So it could very easily, the euro, come down here again, right? So this was the forecast to have that we were in the wave 4, right? And now let's see the actual. So we have the wave 4, but pre-dip. Anyway, I think that we have a high probability trade. The target is the 110 area. But I don't trust this leg up yet. I'm going to wait a little bit more to see more bullish price action. And then during the retrace, I'm going to buy the euro. I tell my clients precisely where to buy once I have all my validation technique checked. And once we're in the trade, we're going to do it with a small stop loss and a target at the previous high at least. If the price breakouts pretty strong to the upside, the resistance, we are going to keep the trade for longer. And I'm thinking that we can trigger this trade with 10 pips, 20 pips. Now, if the price makes a lower low here, I'm not going to buy the euro yet. Something different might be happening actually if that happens. So look how you can use the Elliott wave theory to trade or not to trade and to adjust the wave count if something unexpected happens. Now, let's have a look at another trade that I have in mind for the week, and is the dollar CAD. I just shared to my clients the setup to trigger the dollar CAD. We triggered a couple of pips ago to the upside. We already set our stop loss and everything. Everything is posted in the members area. You have to join the Elliott Wave Street membership in order to see those levels where we bought the dollar CAD. But in terms of the analysis, the target for the week is the 140.50. 140.50, 140.60 area, above this high and at least this high. And we are trading here with a tiny risk in terms of risk and in terms of pips. So this is a nice risk-reward trade. Once the dollar CAD makes the high, we're expecting a 3-wave sequence down. So the waves are helping to understand the markets and to trade and to manage the trade and to help us understand what to do with these markets. And the next one is the fantastic S&P. Oh, the S&P is so great. The S&P, it took me a while to understand that the S&P was going up, right? So actually, right here during this market cycle, I was thinking that this was the corrective and we were going lower. However, I didn't find a way to trigger the trade down. So it was just the scenario, but I didn't find the trigger because I never see a 5-wave sequence down. Now that everything is more clear on the S&P, I have a target at the previous high, 3,400 area. All right, and this is a daily chart. That's my new target. So it's true that I noticed that we were going up, not here, actually here, and it's enough to make some good money. Now, let's go to lower time frames to check the internal waves. So we are in the first leg up. We have more potential to the upside. Today is Memorial Day, it's holiday, the market is closed. So we have the futures market open, but it's going to be too slow during the day. But anyway, the plan is to have the completion of these legs this week. We can very easily break out the 3,000 and then start the retrace. I don't know how deep the retrace is going to be. Maybe we have a shallow retrace or we have a deep retrace. But anyway, I'm going to be ready to buy the S&P once we have the 3-wave sequence. And look, my strategy, I don't care how deep a wave is. I only look for the 3-wave sequence, and once I have the reversal, I start buying, right? There or here, whatever. I will guide you inside the membership with precise trading plans. And let's have a look at the bond. I really like the bond as a validation for the S&P. The 10-year bond, this is the price, not the yield. I'm looking for a breakout of this internal head and shoulders formation. We can go here more conservative and add the line over here. Now, we have the head and shoulders pattern. If we have a breakout of this neckline, it's going to validate the plan. Now, if the bond starts going up, the S&P is not going up, right? But if we have this breakout and the bond starts going down, and I think that the bond is a leading indicator, we are going up on the S&P. So it's going to be key to follow the bond as well. We also follow the bond with the wave count every day in our service. Now, what you need to do right now is to visit ElliottWaveStreet.com. Visit now, ElliottWaveStreet.com, and click on the membership on the top menu. Right here, you are going to see our 3 plans. We have for the Forex trader, we have for the stocks trader, and we have the full access if you want to receive all the potential of Elliott Wave Street in terms of Forex, individual stocks, and futures. On these futures, you are going to pick this package then. So sign up now. We have this fantastic service. If you want to add forum access to ask questions, a little bit more follow-up, you can trial with the forum that is at the bottom. Don't forget that all sales are final. We do not provide refunds. So if you want to cancel your membership, you need to send us an email 7 days before your expiration. If you don't want to get charged, there are automatic payments, all right? Please have a fantastic trading week. I'll send you the best energy to make some good money, and I'll see you inside the membership. Take care. Bye-bye.